Ethereum is looking good to rocket towards $1,800 over the coming days. Today, we're going to talk about really focus on identifying the end of a correction. That is your biggest job, because if you can identify the end of a correction, then you know the market's going to move to a new high, and that's where we make the most amount of money. So let's dive straight into Ethereum. So high level with Ethereum, we've had this really nice wave 1 on the blue, wave 2, a nice wave 3, textbook stuff here, and it looks like a nice wave 4. I've put a question mark here because it's not confirmed, but it's likely to hold, and we're likely to see this move up into this range over here. We'll talk about these two. These are really reliable common zones as well. We're also going to talk about momentum and seeing why does this look like a wave 4 from a price, time, pattern, and momentum perspective. Now, if you want this chart, by the way, you can actually now download this chart for free. You can view it, or you can actually download it. If you click on the link below, you get all my charts, and one of which is Ethereum. You'll see Ethereum over here. So that's in the link below, so you can have access to today's analysis. So let's talk about the trend, right? The trend right now, the weekly momentum is actually pointing up. So the weekly trend is up. The pattern trend is up because we've got a 5-wave movement to the upside. But let's look at the stochastics RSI. It's my favorite trend indicator by far. Is this over here, where the blue line goes above the red. Now, technically, the blue line is not above the red, but by tomorrow or later today, is more than likely going to be over the red. But you'll see the last time this happened, it really coincided with this low, and we had a nice movement to the upside. And we should anticipate the same thing over the coming days, probably maybe even today, later on today. But what I want to now focus on is how can we identify what are the common traits of a wave 4? So wave 4 is a corrective wave. A wave 2 is also a corrective wave. Wave 1, 3, and 5 are impulsive waves. And they're really the waves you want to be trading. Wave 3s tend to be the longest, but wave 4 is what we're talking about over here, right? This was a wave 4 in the red of this wave 3. 1, 2, 3, 4, and then a 5. And then this blue is a 3, and we're looking at this as a potential wave 4. So there's a few common traits with wave 4s. One of which most people don't know as a guideline is most wave 4s actually end in the range of the lower degree former wave 4. Oh, wait, yeah. What? Come again. Look, that's why I've created my masterclass. I want you as one of my students to join me in my private community, my weekend workshops. I've created a 4 secrets masterclass so you really get a flavor for recognizing pattern position and how to do it. And if you like it, you can buy my courses heavily discounted right now, but it's to really upskill yourself. And you get a lot of value just from the masterclass itself, because we're going to cover some basics over here. So we're talking about Elliott wave theory, and the markets are driven by fear and greed, and that's why it becomes predictable. Crowd psychology is predictable. Individuals are unpredictable, but crowds tend to become predictable. So what I mean by this is on this red, 1, 2, 3, this is the former wave 4 of a lower degree count, and this is the bigger degree count of a wave 4 in the blue, and we can see that this low is within this range, right? So that's a guideline, that's a clue. Normally it tests like the extreme, and we can see that's happened. So that's one. Well, we've clearly got the momentum that we spoke about over here. We've got this bullish reversal coincided with this, so it's likely to hold. So that's 2. Then we've got pattern position. It looks like, and on a daily time frame, A, B, C, which is relatively common, and it's more sharp on the way down, and the A, B, C on the wave 2 was sideways. When wave 2 is sideways, wave 4 tends to be down, and it tends to be the opposite as well. When wave 2 is sharp, wave 4 tends to be sideways. That's just the nature of it. So that's 3 things over here. Now let's look at Fibonacci. So I just want to talk about typical wave 4 retracements. In other words, when you see a wave 3, we can actually measure the wave 3. And most wave 4s, as a minimum, will come back down to 38.2% of wave 3. And as you can see over here, hopefully you can see this clearly, is this is the 38.2% retracement. So we measured this wave 3, retraced it back to 38.2, and we can see we tagged that range over here. So now we've got another confluence of events. We can do one more. We'll do time. It's just a basic bit of time. We just take the low to the high of wave 3. And the 2 ratios we want, again, I'm going fast, but you just kind of see the confluence of events. This is a typical range. So now all of a sudden we've got this range over here. So it gives us a lot of confidence to say, okay, this is looking like a nice wave 4. We got momentum, double time frame momentum, pattern price, and time. We've got some other guidelines. It's in the range of the former wave 4. It's a sharp decline. We got ABC pattern, so it's looking good. So what I've done to finish off on today is I've done some Fibonacci projections, right? And these are the two ranges. Something called an external retracement and a price extension. I cover that in detail in the masterclass, but also in my courses on how to do this. And these are the two. This is the minimum expectation, and this is the typical. Now there is one other range we want to be aware of. Let me just pop it on here. And because with crypto, sometimes wave 5s, like commodity markets, are the extended wave. And if that's the case, then we want to be aware if these price zones get broken, then the next two price zones we want to be really aware of. This is the typical maximum, which is closer to 2000. So I don't think it will go beyond here. But if it does, then the next zone will be the 1.618, which is more towards 2250. But this is the typical minimum, typical zone, let's just call it a typical zone, typical maximum, and then the overextended maximum. And if this breaks, there is another ratio, but we don't really need to look at that until that happens as well. So there you have it. What do you think? Textbook stuff over here. A wave 1, 2, 3, 4, 5. Looking good. Get the charts. Get the charts. You get it for free. Download. Just click here, pop in your details, and you'll get all my charts. And it'll be literally this chart. You'll see I'm just going to click save. And now this exact chart is what you'll get. With a four screen setup, you'll get it like this. So it'll look like this. So you get the macro on the top left, top right is the daily chart, and so on and so forth. And take the masterclass. Check it out. If you like the teaching and you really want to make money from the markets long term, next 1 year, 2 years, 3 years, 5 years, 10 years, 20 years, you want to be in the game long term, you have to have a trade plan. You want to treat it like a business, and you want to really get the edge in your favor in a consistent manner so you can just ride that edge time and time again, short term, medium term, but also long term as well. So let's finish on a quote. By the way, if you like today's video, show me some love, like, subscribe, hit the bell notification, share this video because it's very likely to occur. We can never guarantee the outcome with any market because there's so many things that are happening. But what we do is we just stack the odds in our favor. And it's more often than not when 4 things coincide, more often than not, you'll see that. But you want to have acceptable capital exposure to find out if you're right. And if you're wrong, you take a small loss, or you break even, or you make a small profit. And if you're right, you make a lot of profits. So normally I read a quote from my book, but today I'm just going to go with one off the top of my head. It's the classic one. The trend is your friend. Ride it until its end, until it reaches its bend. So right now we're on a wave 1, 2, 3, 4, and a potential 5. So we're going to ride that 5 to the end, but then get ready for a potential end of that trend, and then get out of that trade. And then we're going to be looking for some type of correction that might last a week or two, some type of ABC pullback on an intermediate degree, and then we're going to look to ride the next trend. But there will be some shorting opportunities as well. So the trend is your friend. Ride it until its end, until it reaches its bend. Get the edge in your favor, ride that trend, and make some good money.